Good to see you, John. We're recording this on Friday morning. Um, John, we've just come to the end of the March quarter and stock markets performed unusually well. The global MSCI World Index was up 7.7% for the quarter. And the US benchmark S&P 500 is actually up 10%. Now, Australia didn't do quite as well as many of the other major developed markets, um, but there seems to be a confluence of optimism that we've had a soft landing and that we're kind of taking off again, and that we can still possibly expect two or three interest rate cuts later on in the year. Are markets a bit too optimistic, John? I mean, there seems to be a lot of enthusiasm built into prices at this stage. What do you think?
Well, markets are always optimistic and always forward-looking, and we are getting confusing signals regarding the interest rate cycle. But it's clearly that we're on an interest rate cutting cycle. We just don't know when it's going to start and when it's going to finish. So in terms of optimism, I think I was listening to a video Q&A with Jerome Powell this morning on YouTube, and he seemed fairly upbeat. He indicated that interest rate inflation has come down, but it needs to stay down and stay closer to 2%. Really, that's what he was saying, and then the Federal Reserve will have a lot more confidence. But he didn't seem to be suggesting there's anything to worry about. It's only the trajectory of inflation. Now, in terms of what's caused a little bit of pessimism this morning, there's been some commentary out of other Federal Reserve members, which I guess we'll talk about. But obviously the oil price is kicking up for, and the sort of, I don't want to use the word Goldilocks scenario is that inflation comes down, so the cost pressures come out of the economy. If demand was picking up and having an effect on inflation, higher interest rates would hold that in abeyance, and we just move to a lower inflationary environment in the second half of this year. But the issues regarding the oil price and the Middle East issues, the Western world still hasn't got any control over oil prices. It's subservient it to OPEC. America's done its darndest by increasing production, but really the Western world needs to move to a non-OPEC controlled oil market and fairly quickly, because that's the disturbing feature of the current cycle, is that oil's poked its head up, causing inflation cycle to be prolonged, and the optimism may be checked by that.
John, you've spoken about cycles a bit, and you mentioned the oil price gone from 80 to closer to 90 in the last few weeks. The gold price is at an all-time high. Copper has moved up strongly to, I think, 420.21, 422 an ounce. Gold, as I said, an all-time record. Are we moving into a new economic cycle with thoughts about a slowdown having disappeared, and now we start with some of the global PMI figures hinting that we're moving into expansion? Is this now time for commodity prices to go up, and perhaps for the Australian share market, which has not performed as well as other developed markets, to play catch up?
Well, we're seeing metal prices and speculative metal prices rise, whereas bulk commodities are weakening. We're seeing iron ore breach $100 this week on the downside. Copper is well above $4, which to me has always been a sign of economic growth, industrial growth. So that's good. The gold price is anyone's guess, but there's a catch-up needed in the gold price, because if it does hold its value against inflation, that's one of the theories, then there was quite a lot of recovery required. So it's going through that process of recovering lost value for the 2 or 3 years of inflation coming out of COVID. So that's why I put that down to. Are we into a new growth cycle? I think, look, we've had a slowdown. As I've said in my recent presentations, we had a recession, a very short recession in 2020. market corrections in 2022. So there was economic slowdown, a lot of stimulation, a lot of government stimulation, monetary stimulation. Economies are coming through out the other side. It's not dynamic growth in Europe. It's not dynamic growth in Japan. America's has been holding steady. But I keep on saying that holding economic growth steady in America is being supported by massive stimulation on fiscal policy, and that becomes an issue in terms of funding the budget and funding the interest rate cycle. And I'll just make this point, Paul, as I listened to Jerome Powell this morning, and I was waiting for the Q&A, not one question about quantitative easing, not one question about the Federal Reserve's holding of Treasury debt, and not one question about the capacity of government to service interest. I think that's important to understand. This discussion around the economic issues, particularly of America, are not very balanced at present. And I'm not even sure whether the people who are writing and procrastinating on economic outlooks actually understand the bigger issues, which are probably more significant than just economic growth in America. It's actually funding the American economy going forward.
John, we did get some good news this week, which was that China has finally lifted the boycott of Australian wine. So 4 years after China punished us for asking about an inquiry into the origin of COVID and the imposition of a range of boycotts on our exports to China, most of them have now been lifted. I think there was on coal, on barley, now on wine. I think lobsters and beef still remain. But I think it's been quite interesting that there's been a bipartisan approach to coping with this Chinese economic bullying, if you like. Is that something that's impressed you, with the resilience of the Australian economy and the leadership involved there?
Well, thank God there is bipartisan,
Yeah,
a bipartisan approach to a foreign international trading problem. We would have thought that it's not a political discussion. It's an Australian national interest discussion.
yeah,
I think, as I've said before, and I reiterate, now Chinese failed miserably in affecting the Australian economy. If that was what its intention, I don't know. It was really sending a warning shot, but it forced Australian exporters to look for other markets, and it's actually worked against China. We have found other markets for a range of commodities, which is to the benefit of Australia. We need to diversify our trading base and have a range of markets, not an overly focused market with China. So they've actually done us a favour. They might not have done a favour to the wine producers, but Australia's got to be very careful in some export markets that we don't overproduce in low value export commodities. And some parts of the wine industry are sort of, that's where they operate in. They're not in real high value added, and they don't have an international brands. So I put that in. Look, it's a good reaction by Australia, good approach to the issue, bipartisan, but good news for Australia diversifying our export base. But we are still dominated, Paul, by iron ore. That still represents a significant part of our exports, and then LNG behind it. So well over 50 to 60% of our export revenue comes from two commodities. So we need to diversify not only our markets, but also the export commodities that we're dealing in, because that's where we run into trouble.
John, some news out yesterday indicating weakness in new building approvals in Australia. Labor came to government promising a major commitment to increasing the stock of housing. It just hasn't happened. So the figures for that came out yesterday was something like 160,000 new building approvals, and I think that this is woefully inadequate when you look at us taking in 600,000 migrants over the last 12 months. a bit longer, it's just not going to work out. And we're seeing this reflected in house prices and rents. What are your thoughts? What could be done? Why is there such an absence of responding to this major issue?
Well, you made the point in the previous question of a bipartisan approach to an international problem. We have a domestic problem in terms of housing. You would have thought a bipartisan approach for a national housing summit where all governments, all parties, all states and local councils gather for a week with sensible economists and people who have investigated the markets and looked at international comparisons to come up with solutions and take it away from the floor of the parliament where they're just arguing back and forth endlessly with no solution. So I think there are probably a lot of solutions. I don't want to go through what I think, but I think let's just put it in its box. There is no shortage of funding available for Australia to build housing. Absolutely no shortage. So it's not a funding problem.
No.
There's a problem in terms of the conversion of that funding into the development of housing. So that needs to be focused. Why aren't houses being built? Why aren't appropriate houses being built, which are affordable? Why aren't suburbs being redesigned so they can take on more population close to major cities where jobs are? You know, it's going to take a bit of thought process, and there needs to be a blueprint and a plan developed, which everyone knows what the plan is, and they can focus on it and work towards it. But this nonsense we have in this country with state governments and councils doing whatever they want, zoning regulations inconsistent, no national approach, the government immigrating 600,000 people and saying that's a state problem and a council problem. I mean, you could not, again, it's Australia with no leadership and no vision. So that's my answer to your question, Paul. I think there are plenty of answers to solve the problem, but the further we get behind, as we are, to your question, we should be building between 200 and 250,000 dwellings a year. We're between 50 and 100,000 below what we should be doing. You do that for 2 or 3 years in a row, and you've got a major problem. And we will find it very hard to address affordability. We'll find it very hard to catch up. I'm seeing discussions around what I call just prefab homes. Okay, well, that's interesting. I don't think that suits every suburb of Sydney or Brisbane or Melbourne, but there needs to be a policy setting here, and very quickly.
Just a couple of figures that I read this morning. I think real estate home prices across Australia up 40% since the start of the pandemic in March 2020. So over 4 years, 40% increase. And since Labor took power, rents are up 26%. A lot of people are hurting, and a lot of people are going to feel that they are shut out of the housing market forever.
Well, there you go. That's why you need a housing summit. Look, the disappointing is that housing is lifted probably twice the rate of inflation, and therefore probably twice the rate of wages. And we know wages haven't been indexed against tax, so the issue there is significant. Interest rates have gone up in the meantime, so mortgages have gone up. The cost of mortgage has gone up. So it doesn't take too much thought process around it, Paul, to see we have a serious problem. But we've always had a serious problem, which the central bank and the government have not acknowledged, have dismissed, that we've had a housing bubble, which is getting bigger. It should have been rectified years ago through restrictions on credit, requirement for deposits. But now they've let it go so long, they can't bring it back without government assistance to help people on deposits, home equity sharing. It's appalling. And also to give tax concessions to people who are living in their home and are struggling with interest, as opposed to giving tax concessions with people who are investing in property. I mean, it's pretty basic. And Australia is struggling because the political debate is so poor, and it's so partisan, and they're not about getting answers. I'm not even sure the politicians actually want an answer, because if they solve the problem, they've got nothing to talk about.
John, I want to finish on valuation. So this will be the last question. At the moment, as I said, we've had a strong quarter. We've started April with a little bit of profit taking. Perhaps investor optimism was a bit extreme, and money needs to be taken off the table. But are you worried about where valuations are? In the US, the long-term average for forward PEs is something like 16, and it's now the market's at 21. In Australia, the long-term average is about 14, and we're closer to 17. Does that worry you, or you think valuations are within a broad range and it's not material?
Look, they're in a broad range. We've had a good rally. Normally after a strong rally, you get a pullback. So there's probably pullback happening. But as time moves forward, as interest rates come down, as economic growth comes through, markets will find a new bottom and then move forward. The trick is not to buy overvalued stocks. The trick is to buy inside your averages, Paul. There is a weighted to big cap stocks. Very, very clear in America. We know that. So the weighted average, if we take those big stocks out, the broader market is well priced. Probably not as dynamic growth opportunity as those bigger stocks. That's fine. In Australia, there is a bias to large stocks because of our indexes. We don't have diversification in our index, and we have too much money going into too few stocks, so we're getting that magnification. And I've said one of the things we should think about is what sectors have underperformed. Look at those. The broader underperforming sector has been the small and emerging companies. They've got two things going for them. I think there's a lot more dynamic entrepreneurship in that part of the market. They will benefit from economic growth. They will benefit from low interest rates coming through. And I think there's a lot of merger and acquisition activity, which is we're seeing it already with a couple of takeover bids. I think there's a lot more to happen in that sector. So it's leave it to your fund managers to rotate out of big caps into mid-sized caps appropriately, not willy-nilly. We just have to weigh up where the opportunity is. But I don't think the equity market as a whole has any issue. I do think it's just interest rates are going to come down eventually. I think inflation will come down, but I am watching the oil price, and I'm watching the reaction of governments. What are they going to do about it? Because if they do nothing about it, that'll feed into inflation, feed into bond yields, and your compression of PEs, which you're worried about, may well occur if they don't get on top of it. So at this stage, I'm just moderately relaxed when I see there is still opportunity in the share market.
So patient holders and stay in there. Yeah. Thank you very much. That's all we got time for. And to our viewers out there, have a nice weekend, and we will see you next week. Thank you.
Yeah.